Good morning. It's Friday, the 17th of February, and welcome to Signal Centre's Talking Bull. I'm live. I'm Steve O'Hare, and it's 8 o'clock in the morning. We're going to go through the headlines first, and then dive down into some technicals, and go through. And by all means, please join in the chat. Ask me about markets that you're following, and I can see if I can add a little bit of colour to the technical side of things. We're going to start off with Bitcoin on the technicals, and then drill through to commodities, FX, indices, and any others that you might want to look at. So let's get the headlines going. Have a little look here and see what's been going on in the last 24 hours. US producer prices increased 0.7% for January after a 0.2% decline the previous month, and above consensus of forecasts of a 0.4 increase. Although year on year increase still declined to 6% from 6.5%. Underlying prices 0.5% on the month, increased 0.5% on the month, with the year-on-year rate declining to 5.4 from 5.8, but above expectations of 4.9%. The Philly Fed manufacturing index dipped to negative 24.3 for February from negative 8.9 the previous month, and well below expectations of negative 7.5. Production remained in positive territory, but there was a further notable decline in new orders, and unfilled orders also continued to decline. There was a small increase in employment, while the average work week edged lower. Cost pressures were little changed, while there was an easing of upward pressures on prices received for the month. Cleveland Fed President Mester stated that rates will need to go above 5% and stay there for a while. She added that more upside inflation surprises could make the Fed policy more aggressive, and that the recent data showed that the demand side of the economy was not softening as expected. She was not ready to say that a larger rate hike is needed at the next policy meeting. This led to Treasuries losing further ground after the latest US data releases, with a 10-year yield moving above 3.85% for fresh 2023 highs before a slight correction. Higher US yields provided significant dollar support during Thursday and also drew defensive backing from significant losses in equities. The dollar index posted 6-week highs just above the 104 level. Reserve Bank of Australia Governor Lowe continued to warn that inflation is too high and further rate hikes will be needed, although he also added that he might reconsider the position if there is another weak job report. Obviously, a weaker job report would mean that we wouldn't need to hike rates further, because unemployment leads to people slowing down in spending. UK retail sales volumes posted a 0.5% increase for January compared with consensus forecast for a further 0.3% retreat, although there was still a 5.1 annual decline. So that covers off the headlines. Let's dive into the what's going on in the crypto world. Looking at Bitcoin first. It's been a bit of a rough week overall for Bitcoin. It was a rough day yesterday for Bitcoin. It got to the resistance level, which I highlighted. We've got this, if we go all the way back to the spike low, which we talked about yesterday, we broke through that 28,800 support, spiked down to 25,400, and since then we haven't managed to get above it. 15th of August last year, we tried and failed. We stalled at 25,212. And yesterday, we stalled at 25,270. So we got a little bit closer to that resistance, but the turnaround was quite abrupt. And it's posted what looks like a shooting star candle. So very negative candle for the day, and highlights a potential for this rally to reverse. So be very careful with today's price action. Really, prices need to be above 24,350 to feel secure, and maybe to sort of like think about retesting. Overall, the moving averages are looking quite positive. We've had a golden cross on the 9th of Feb, and that's positive for maybe more midterm price action. But yeah, overall, yesterday's day wasn't good at all. Ethereum was the same, posted quite a clean shooting star candle. The body of the Bitcoin candle wasn't quite so bearish, but this is a really nice shooting star candle. And yeah, we've got to really sort of like, you'd like prices to stay above that 1680 level, ideally close above the resistance at 1730 again, which we take back from that spike down that we had on the 12th of May last year. So that is going to be a similar type of resistance level to the Bitcoin's one. And Ripple, slightly more aggressive. We could actually redraw this downward trending resistance line, actually take into consideration a few cleaner lines on here. We've got 1, 2, nearly 3, 4, 5, 6, 6 lines of contact on this downward trending resistance. And yesterday we stalled in front of it and reversed sharply. The high was 40.46, and we managed to close down at around about 38.50. So not great. We still got a moving average crossover, the 55-day, 100-day moving average, the 200-day moving average. We closed above that on Wednesday, but right back down below it yesterday. So that's XRP Ripple we're looking at as well. Taking a look at commodities, gold has had a little bit of a sell-off. We posted this bearish flag the other week and we talked about it then. The measured move target for that is 1790, and price action, the momentum to the downside, because the dollar is rallying. We can see down here the dollar index is 104.50 now, so looking pretty decent. We've had a moving average crossover to the downside, the 100, 200-day moving average. So that's slightly bearish, but we are above the 55-day moving average, so that's a positive thing. And we got this double bottom formation from the it's the intra move higher. So normally you get like a correction in 3 waves: 1 wave up, 1 wave correction, and a 3rd wave higher. And normally they're very similar levels. So even if we get a tool on here and just measure the move from here, we can see that if it was a similar move higher for the next wave, we're looking at 107.07, which is nicely into resistance up here and towards the 200-day moving average. So a little bit of acceleration now on that dollar rally. So it's looking pretty good for dollar, not so good for commodities based around dollar. So that's why we're seeing gold move lower. We've seen it break support at we've got let's clean this up a little bit. Actually, we've got a load of lines on here. Let's try and get some. Where are we looking? We're really looking for, if we look at the major rally that we've seen, that's the rally from the support down at around 1616 all the way up to the 1960 level, and we're through the 38.2% fib. So that would have been support, broken through there, on its way to lower prices. Measured move target for this bearish flag is around 1788, which is a 50% fib retracement. So that will be a key level to look out for and watch. Silver's continued to move lower in the same fashion as gold. We've broken through a support level that we had highlighted, 2142, and we're on our way towards the 200-day moving average, which comes in at $21 exactly. Copper, in fact, had a brighter day yesterday, bullish engulfing candle for the previous day's price action Wednesday, and we managed to break and post highs that we haven't, levels we haven't seen since the 2nd of Feb. So a nice little rally in copper, supported there by the 55-day moving average. Again, you can see these bullish crossovers that we're having on the moving averages are in commodities and in indices. Taking a look at Brent crude oil. A bit of a negative week overall for Brent. Monday negative, Tuesday negative, Wednesday negative, Thursday negative, and Friday pushing lower again. So all round, pretty poor week. Managed on Monday to post a higher high than last week, and we can see that the price action is pretty much reversing last week's positive move higher from a swing low. But yeah, not looking great. Resistance now, we can safely say the 100-day moving average and this week's swing high around about 80.77 is resistance. Support, we've broken interim support, which was Wednesday's low. That was the when we got the oil inventories out. Next support coming in around about 76.70. Major supports 72.58 and 70.21. We've got Brent crude oil trading at just over a $6 premium, and that's trading in a similar sort of fashion, similar sort of resistance levels, the 100-day moving average, approaching the 55-day moving average, which comes in at 83, and support below in the form of $79, $77.60, and $75.26. Really need to get above that 100-day moving average at 86.83 to open up potential for the upside, but it continues to be suppressed on the oil side of things. Natural gas, I was trying to fade this yesterday in the gun to head challenge and it didn't work. We can dive down into detail later, but we saw price action over the last 3 days have broken down and continued. Really, the level to watch here is the 236 level. A break of there opens up a lot more downside in my mind because of this sort of bearish flag formation that we've sort of like fallen upon. The sideways price action is trying to bottom out. It's not able to do it, so a bit of a concern. Let's see if we've got any requests before I dive. Question: Bitcoin short? Would I go short in Bitcoin? You know what I'm like. I'm a big bad bear for Bitcoin. Yeah, I mean that's from a technical perspective, it's good risk reward. Ideally, I'd like to get short around about this 24,300 level, and my stop would be a very hard stop above the 25,500 level. A break above there, I think, opens up a more move because you can see we'll have this vacuum type of trade. I think a break above there could open up a move up towards the 29,000 level. However, from the short-term technicals, you're really looking at this candle, this shooting star candle. They're pretty effective and always worth a sort of like a trade. Risk reward in it isn't great because support is around about 21,380. So you're looking at really a one-to-one trade idea, really, if you think about it. If that actually, yeah, 1.2 to 1, not great. We always like to look for something a little bit more than that. But you know, from a technical perspective, a slight momentum perspective, if we look at the daily charts, the intraday charts, 4-hour chart is still above the Ichimoku cloud. So there's still a little element of bullishness there. And on the hourly chart, we haven't managed to break below the hourly cloud either. So we're finding support here. So wouldn't really consider this a great level to get short. I would look to get short a little bit higher, but obviously you've got a lot of support to overcome. And it's very difficult. Bitcoin doesn't really act like all the other asset markets. It's a very sort of like almost a long only type of market where there's a restricted amount of speculation on the short side of things. Hope that explains that. So we'll go back. Yeah, we've covered off the natural gas. Oh, we haven't covered natural gas. We were sort of looking at it, and it's definitely under pressure. There's my gun to head from yesterday. Stopped out. Not good. Joe won't be happy. Let's take a little look at Forex now. Looking at the euro dollar, obviously euro dollar will have sort of been under pressure yesterday after the dollar rally. And again, we can see from the weekly chart, this is playing out quite nicely as a top being in place. The shooting star candle and the follow through we've had, and we've now even tested this quite strong support level around about the 106.40 level. So from a daily perspective, we've broken down through this little bit of support that we posted this week and from even last week's price action, and broken down and looking to extend further. Next support really, I would say 104.83, that swing low that we saw last Friday, and a little bit of support coming in from the previous swing high, which would have been resistance, but now turned into support on 104.75. So feels a bit under pressure on the euro dollar side of things. Potentially expect that to continue. Similar sort of price action in cable. The last 3 days have been negative, and we're challenging support between the 118.48 level and the 200-day moving average, 100-day moving average, all coming in here. So if you are a sterling bull, you'll be thinking this is a great opportunity. And is it part of a bigger formation? Now, looking at this, the formation that really screams out at me is this inverse head and shoulders formation, headed all the way down here. We failed at the neckline, or so this is a double top formation. So we could see quite quite a move. If you think about it, we've got the inverse head and shoulders. That's the longer term potential, but it has to break this neckline to actually play out, and then the measured move target would be a lot higher. However, we do have a potential double top formation here, and the neckline will be the key to it. So a break of 118.41, we're not far away from that now, a break of there, and we're looking at a move to the downside from this double top. The measured move of that would be a move to 112.38. So that's what I see in cable at the moment. We've obviously got this support 118.41 to overcome. We've got the 100-day and 200-day moving average sitting there, and overall you'd really have to wait to sell that break there. Lots of negative momentum since we topped out on Tuesday at 122.75. That's been quite an aggressive reversal. Dollar yen seems to be pretty happy at the moment. We look at euro yen as well, and sterling yen. They've been ones that we've been trying to keep an eye on for people this week. And again, you've got the makings of an inverse head and shoulders formation, which is potentially already started. This is the sort of formation that we're looking at. Let's get that, be a bit more accurate with it. So a downward sloping neckline, we've broken above it, and it's been really nice and aggressive. So dollar yen very positive on the back of that. Once it clears this resistance formed by the neckline between the left shoulder and the head, which is around 134.77. No, it isn't. It's a little bit higher than that. It's around about 135. Coming in at 134.77. Maybe I haven't drawn that correctly. Yeah, 134.77. So it's trading at that level now. So it's a really sort of like key for me to also break this the horizontal level of that neckline between the left shoulder and the head on a downward sloping one. Still got resistance above. You've got the 55-day moving average stalling quite quickly, and then looking to turn higher, but they've still got the 100-day moving average looking to cross over the 200. So maybe the rally has got only a little bit of movement to the upside, but it's still a good potential there at the moment. Sterling yen, lots of people have been looking at this week. We threw in a hanging man candle. We talked about that yesterday, Wednesday, and negative price action. The market did move lower. We're talking about trading this range, selling around here, having the stops above here. I think Joe did that earlier in the week on a come to head trade idea, and then sort of like we've got the upward trending support coming in today around about the 158 level. So plenty of opportunity on the downside with that momentum now from the top. Aussie dollar has turned lower, breaking through this neckline on the head and shoulders formation. So that one is, for me, is key. We're below the 55-day moving average, approaching the 200-day at 68.05, and the 100-day moving average is a lot lower than that, come down at 67.07. So that's covering off Forex. Let's take a look now at indices and see how they did yesterday, because we did get a little bit of a reversal after an initial rally this week. We stalled on Tuesday, reversed sharply from above where the resistance was previously and closed below it. So I didn't manage to sort of like close above that resistance level at 34,275. And yesterday's aggressive sell-off to the downside has taken us now extended this morning below the 55-day moving average. We've got a couple of spike lows we saw, 33,487 and 33,507, and we've challenged that this morning, 33,508, and just trading just above there at the moment. So negative momentum to the downside, plenty of room for a retest of support levels below. Next one, 32,900 and 32,425. Nasdaq has stalled and moved lower, and really sort of like all eyes will be on this swing low that we saw on the 10th of Feb, 12,200. that will be potential for a double top formation. You can see this swing high here, this swing high here, the neckline down and below. A breakdown would lead to an aggressive move lower. So under pressure, really, as we go into the end of the week. Similar sort of price action in S&P. You've got the high, the neckline coming in. Let's highlight it for to be a bit clearer. 4,050. A break of there opens up an extended move, which could mirror what we see in a nice even move down to 39.05, which again is quite a decent support level. So that could be the target for selling a break on S&Ps. So that's about covered off. I can't see any requests. Let me just refresh some of my screens. And yeah, no requests so far. So let's dive into gun to head trade idea. Now, this is the part of the show where the participants, normally myself and Joe, take a look and pick a live trade on air. Each idea must have a stop and a target. It gets closed at 9 o'clock if it doesn't reach that stop or target. And we have a live account that we trade on since the start of the year. Not doing great on it actually at the moment. We had a good run over a period of 3 years on a demo account, but this is the live account, and we're small down at the moment. Let's just log in there, and let me get logged in, and then I can share the account information with you. Here we go. So you can see here at the bottom, net asset value of the account 1922, so was it down about £78, and yesterday we can see that my nat gas trade idea resulted in a loss of 1972, so that got stopped out. And yeah, day before, oh, that was Joe's. I think that was Joe's selling sterling yen, which would have been really nice if he'd run it. But we close all trade ideas on the day, and yeah, we go for another one today. So we're risking 10%, sorry, 1% of the 1922. So we're risking £19.22 on a trade idea, and I'm very torn between buying the dollar or selling indices. And you know what I'm like. I'm a big bad bear. So let's take a look and see if we can get anything from these indices, the S&Ps, the Nasdaq. There's no, we're going to look at calendar data at the moment. There's nothing really out today. So are we going to get that continuation down, or are we going to get a little bit of profit taking coming into the weekend? It's definitely something to consider. And let's see if we can get something from the daily charts. We've seen sort of like the nice like breakdown lower very recently, and I'm going to go for a short in Nasdaq. Why not? Just expecting really that continuation after the bearish dark cloud cover forming last week. So here we are. We're below the 1 hour. It's let's see if we can take it down to a further time frame, just to sort of like really find a good risk reward level to put that stop into. And where are we targeting? Even if we sort of like look at the hourly time frame, there's not a great deal of room on the upside. But let's try and go something around about here. We'll try, as we've talked about, the risk reward I want to do on this is around about 2.5 to 1. That's my average is about 2.25, and I like to. Oh, let's take profit stop. Let's get that percentage risk. We want to risk 1%. Going at market, we want to risk 1%. And let's try and move this around. 1% is 1922. and we'll target a move down to there. Why not? 25 tick. We're in. It's not exactly where I wanted it to be. I wanted to. Can we move that? Yeah, that's close enough. We're in. We've got the stop in. We've got the entry in where it's really sort of like a bit odd how this is all playing out, but I'm doing my best to try and do it live on air. It's not working out great, Stevie boy. There we go. Ideally, I'd have my stop a little bit higher than that, but I've obviously clicked on quite an aggressive amount there. Looking at the target, it moves to 12,261. The stop is at 12,360, and we're in at the moment. So that's where we've got. Uh, 12,340. There we go, 12,325. That's what the trade idea is at the moment. So I'll get that published up, hopefully before it gets stopped out, because it's moving about, flying about quite quickly. So yeah, that's my trade idea of the day, trying to sort of jump on this sell-off and get a little bit more out of this before maybe we get some profit taking into the close. Right, let's take a look now at the well, it's next week's events. There's nothing on the day ahead on the calendar. February the 21st, we've got global PMI data, and the 22nd, we've got the Federal Reserve minutes, and that's where we are. So thanks for joining us this week. Look forward to seeing you again next week. Joe will be back. We'll be a little bit smoother next week and not panicking so much. And yeah, have a good weekend. Be careful trading today, and we'll see you on Monday. Take care.